Now let's talk basics. By basics, I mean buy-to-lets, so bread and butter stuff. They come with many benefits and is therefore an ideal investment strategy, especially if you like low to potentially minimal risk. The benefits of buy-to-let, number one, of course, is rental income. Buy-to-let properties offer a reliable source of rental income as long as obviously a property has a tenant, and it provides you with steady cash flow as the owner of a property, especially if the property is located in a high demand rental area. According to homelet.co.uk's rental index, the average rent price in the UK for June 2023, so pretty much hot off the press, is £1,229, excluding London. The UK average is now £1,027 per calendar month. Every region has seen an annual increase in rent, with Scotland showing the largest, which is an increase of 15.8% since June 2022 to £940 per calendar month. The North East is the cheapest area to rent in the UK at just £625 per month. Next up, long-term appreciation. Historically, the UK property market values have appreciated over the long term, allowing investors to build equity and potentially benefit from capital appreciation. However, this should never be the sole reason to buy a property, because cash is king and cash flow, is more important than capital appreciation in my view. You also want to be thinking about property diversification. Property investing can serve as a diversification strategy, spreading risk across different asset classes and potentially providing a hedge against inflation to some extent, as long as you're spread over a number of strategies. Leverage is one of the most important words in property and in business, and it's as important in buy-to-let. Property investing allows investors to leverage their capital by using some kind of a mortgage to purchase a property, enabling them to control a more substantial asset with a smaller upfront investment, which is usually their deposit. Let's look at tax very quickly. In the UK, landlords can benefit from tax deductions such as mortgage interest if they have a limited company or if they're a basic rate taxpayer. Otherwise, you've got Section 24, which comes into effect. Then you've got maintenance costs that you can claim, other allowable expenses to reduce your burden, and you ought to get to know about what all those allowable expenses are, because there's lots of them. Property demand is important. The demand for rental properties remains strong in certain areas, particularly in cities with a high population of students, young professionals, or areas experiencing strong economic growth. Some of the downsides of buy-to-let: stamp duty and taxes. High stamp duty costs, or an increase in stamp duty costs over the years, and the recent changes to tax relief on mortgage interest have reduced the profitability of buy-to-let investments for a number of landlords. Regulations. Successive governments in the UK have introduced various regulations for landlords, including minimum energy efficiency standards and mandatory licensing, which can increase costs and is an admin burden. Void periods. Nobody likes void periods. There is a risk of void periods where a property remains unoccupied between tenants, leading to a temporary loss of rental income, which may lead to rental losses. Maintenance costs. Landlords are responsible for property maintenance, repairs, renewals, improvements, which can be costly depending on what needs doing, especially if there are unexpected issues. So I would say to you, spend money on maintenance and repairs regularly to keep a property up to date, so that it doesn't become worse and cost you more money. And it's right that we offer high standard properties to our tenants. Interest rate risks. We've seen a lot of that over the last 12 months. Fluctuations in interest rates can and will impact mortgage repayments unless you're on a fixed term deal, and this is going to obviously affect your cash flow, especially if you have to refinance and the rates higher, and this can be very significant, as buy-to-let landlords have seen over the last 12 months. Tenant issues. Dealing with problematic tenants, late payments, or property damage can be stressful, time-consuming, costly for landlords. Market volatility is something which we don't control, but we need to be aware of. Like any investment, the property market is subject to fluctuations, and property values may not always increase as expected. So don't base your model purely on property prices going up every single year, because what goes up must come down. Liquidity. Like any property investment strategy, the cash you might have tied up in a deal is not available for quick access, and buy-to-let investments can provide a reliable income stream and potential capital growth, but they also come with risks and challenges related to regulations, and if your cash is tied in, until you refinance or sell, you won't realize that cash. So I believe it's crucial for property investors to thoroughly research the market, assess their financial capacity, consider the long-term implications before venturing into buy-to-let property deals. Importantly, seeking professional advice from experts, tax advisors, lawyers, etc., surveyors, property builders is beneficial, and it's going to help you make better decisions. Don't you just hate commercials when they interrupt your show? Well, the commercial I'm about to talk about is quite lovable. Building or land utilized for commercial purposes is referred to as commercial to residential conversions. This can include workplaces like offices, retail stores, warehouses, among other types of property.